Hi, it's Tyrone here. Welcome to another video. This one is going to be specifically on the two simple rules that follow supply and demand, or how to qualify a supply or demand level and when to delete that level. So the rules are these. 1. The level creation. What creates a level? What validates an actual supply or demand level that I am interested in trading? And the second rule is the level deletion. What invalidates the level? And that is if a pivot point is taken out. Now this video is specifically made to talk about the pivot points and what qualifies for a level. So I'm going to talk only about these 2 points here. This is not a backtesting video. This is not a looking for trade setups in the market. This is purely a video to discuss these 2 most important rules, in my opinion. Okay, everything else after that to build a strategy you can add in to increase the probabilities, if you like, but these 2 are pretty much kind of what I've abided by. You know, there is exceptions to the rule with it as being a trader. When you understand how the markets flow and how the candlesticks create certain levels and what is actually within a candlestick, it all boils down to these 2 rules. So if you drop time frames or increase time frames, it's all about these 2 rules, in my opinion, what validates a real supply and demand level. Now if you watch other videos on supply and demand, you won't ever see this. You won't see this at all. This is something that I've developed through years and years of backtesting that I've noticed. It's not so much developed because it's only 2 simple rules, but it's a pattern within candlesticks that seems to work out quite nicely on the long term. So the pros to this is you can trade early where no one else may be looking. There's no lagging information because you're using just pure price action. You're not looking at any indicators, moving averages, support and resistance, going all the way back across the chart. You're using only the most recent price action, which means you are then in the flow with the market at that moment in time. So conventional to other trading methodologies and other, I say, systems that I may use with chart patterns, this is completely in a world of its own, in the basis for building a strategy that you want to stay with the market condition, whether that be ranging, trending, counter trend. The idea is that if you follow these simple rules, you can have quite a high success rate, and that is overall making money. Now I'm not talking now about reward to risk. I'm not talking about lower time frame entries. This video is purely on these simple rules. So let me just explain in detail. First of all, rule number 1, what validates a level? The level creation itself. What am I looking for to then say there's a level is created, I'm now looking to go long in that level, or I'm looking to go short in that level. Okay, I'm not going to talk about the entries to getting in, we're just going to talk about what validates the level. And then the second rule is what devaluates that level. You know, how do I delete that? What happens for me to say I'm no longer going to buy or look for shorts in that level? A level must take out, before it forms, must take out a pivot point. Now I'm not talking about just general overall pivot points. I'm looking at candlestick pivot points. Okay, I'm not going to write all this down because it's very, very simple. This just gives you the outline, and the candlesticks are the most important part of this because it's the most recent price action. So I'm going to use this tool here just to draw on the chart and explain first of all what a pivot point is and how you create a level. Then a pivot point, in my opinion, is basically when you've got the close of 3 candles and one of the candles has a lower low than the other 2 or a higher high than the other 2, and that is the wick or even the solid body candle. As an example, I'm not sure this might be the best one. This is probably the best example right here. These 2 candles right here, this one and this one, has closed, and you notice we've got a higher high, or sorry, a higher low on that candle and a higher low than this area. So therefore this is the pivot point. Okay, so I'm going to clean that back up now, and that becomes the pivot point right here. What I'm looking for then is, because this candle has closed and this is closed and this is the setup, if a candle drops below and closes below that area, then we are looking at whatever level was created above. Let's say it was from here and dropped, ignore this, then this would have been a level of supply, or you can call it resistance, you know, but supply is because it's that area that I'm looking at. And the candle that's created it, I use the whole candle, so I may be looking from the bottom of this wick, and this is the zone that I'm interested in shorting. So let me clean that up. I just wanted to use this tool to explain very clearly. Let's just get rid of some of this stuff here. So then what validates a level now? So we've looked at the pivot point and I've shown you what can validate, but let's have a look in real time what validates a level. So if I look now most recently where there is a pivot point, not on the downside, this is a pivot point if you're looking to go short, obviously take this out, and also to also delete a level below. We'll come into that in a moment. So the nearest pivot point above, I think we had one here, then we had because we had a close here and a close here, and then we've got another pivot point because we've got this close, candle either side, see, candle either side, pivot point, candle either side. This may well be a pivot point to the low side if it is a pip or two below this or more. So therefore we've got a sort of close here, maybe that's slightly lower, so that'll be a pivot point to the short side. So that is what I'm looking for, is these pivot points. That's how I'm explaining a pivot point on a candlestick, is 3 candles, and if the middle candle has a higher high or a lower low than the other 2 candles, then we have a pivot point. That's what you're looking for, and that's what I'm scanning for on the charts. So let's look at this. This is the nearest pivot point right here. Because of these two are lower and lower. And then what happens, we take out this pivot point. That's the first. A level creation must take out a pivot. It's in the making. This area was in the making, but it wasn't. I would probably class this whole area from the lows here is in the making, but it's not a level until it closes above or below. Okay, so it must take out a pivot point and close, not just close like this, but close above or below. Okay, I'm not going to fill all this in, just keeping it very simple. So until this point when we had a close, then this becomes a nice level to look for buys. Okay, and in fact you may even want to extend the level this high, so we're using all this area as a level to look for buys. The bias is long anywhere in this area. As you watch price now, price pushes up, make a higher high, probably a slightly higher high, and it keeps making high highs on the candlesticks. But until this point here, between these two candlesticks, we had a pivot low. Now if this pivot low, and once this candle has closed here, right here, this level is no more if price breaks this pivot point. So I can't use this level. So the level is deleted right here. Is deleted. If a pivot point is taken out, then cancel the level. So as soon as you see this, this has pretty much got to go. No longer a level. Okay, and that's it. You've got to wait for a new pivot point to have a close above or below. So if we were to close below this pivot point, I would, and it doesn't have to take this area out no more, then this would have been a level, which is what I drew at the beginning. Okay, so I'm going to move the chart forward slowly and validate the levels as we go along, and invalidate the levels, so delete them. So hope that gets the pivot point, what I'm looking for, because I move very quickly. Sometimes I forget. I've been trading over 10 years, and you know, to me I just spot this like reading music. So let's continue. We've got the pivot point here below. Now also I'm going to point this one. This is what I'm going to add into it. If if we've got a pivot point right here and we're still pushing up, this level's got cancelled, yeah, because if price drops below that, we can't buy from here. However, if we've had a base and then we start to close, you can see with these wicks we haven't got any closes above the candles, and then we push up, then we've got a what you call a rally base rally. This is a valid level. We can't buy anything below that because the bias is changing, but from this point onwards, and this is the wikis, so this is where I'm drawing the wiki areas of the base, is where you'd buy. And obviously, as you can see, price has come down. There is no pivot low, it's just literally up. We've got this low, this low, this low. You'll be looking to go long in this area on a lower time frame with an entry trigger, okay, an entry technique, whether it's lower time supply and demand, which would be counter trend, or it could always be trend on a lower time frame if the market direction changes on, let's say, this is a monthly, let's say on a daily or 240. So you're reducing your risk for going for targets up in the solid bodied candles. So this is just looking for an entry and an exit. If you think for some reason this market's going to go on a lot longer, you just want to go with a trend, then maybe you would take off half a position at this point and then you would ride the other half. Or maybe you would just manage it on a daily chart or weekly candlesticks. Trade management is another video in itself. So I'm going to try and break these down step by step, these videos, a little bit more detailed like this. And let me just clean all that up. So now you get the point. We would have bought in this area. If I put in a box that validates this level, and then we'll continue from now onwards to see what happens with the market. We would have may have got out of a position already or closed it, and then I wait for the next month, and I'm just looking now. Everything, my bias is long, and I can continue. This is very important now. I can continue going long anywhere in this area if price comes down, providing we've got a, see, you've got a close here now. What's this? A pivot point. Okay, I'm going to delete this off now. Just want you to show. So what I have to do is reduce this level to that pivot point. Okay, so this area is still as an area, but anything below this pivot point is invalid. You could have a wick down and price spike, but you've got to have rules, and this is probably the best rules to keep you out of a lot of losing trades, or losing setups, you see, or at least when you do have losses, you're going to minimize your losses. You're not taking so many, and you're not going to keep getting emotionally involved and trying to take trades all over the place with no strategy, just on pure emotion. That's no good. That is no good whatsoever. So I can still take anything that drops down, providing I don't create another pivot low. Otherwise, then this level will be invalidated. So what I'm looking for is price to keep moving. Now, potentially another pivot low here if we don't take it out, if we push up again on the next candle. And also, what have we got here? Move very slowly. Pretty much both of these, we've got two high highs and price is pushed down. So if you look at one of these is going to be slightly higher, whether it's this one is the pivot point or this one, because if this candle here or this candle is below this wick, then this is the pivot point, and if this one is below and this is above, then this is the pivot point. Either way, there is definitely a pivot point, because we've got candles either side here, or we've got candles either side here and here, or here and here, creating one of these pivot points. Okay, so now what have we got? We've got a close above, a potential pivot point. Okay, not a pivot point yet, a potential pivot point. So you've got a close above. This becomes a level straight away. Okay, and if price pushes down, this is still a level as it stands at the moment, because this is not a pivot point yet. So I've got two areas that are valid. I'm going to now move one more candlestick, one more. This is a monthly chart, by the way, looking at the big picture. So we move another candle. I'm hoping it will move another candle. There we go. We've moved two by the looks of it. So price is pushed up and pushed up. This is a pivot point. So as I'm going along, I'm marking off the pivot point, This level is no longer, but this, because we closed above this pivot point here, hit from this area, this becomes the level. Let's clean it up again. So now we've got a level, we're pushing up, we've got no other pivot points, we're only looking at this, we're not, everything else below this has been deleted, invalidated. We're staying with the market condition. So the next month, and I think the computer's running slow, so I'm just going to, let's try it like this. One, there we go, another candle. We've got slightly higher high here, so if we have a lower high on the next candle, we have a pivot point. Okay, a new one. I don't know what's happening, except I can go look, no pivot point below, because we've got a higher low here, a higher low, then a lower low. If we add a higher low again, this would be a pivot point, this level would get cancelled. As far as I know, if price comes into this area, I'm looking for longs. Okay, anywhere with the wick of the base, pretty much the candle that closes above any pivot point, the ones below it, you want to draw the whole area in as a level. I can talk about levels, drawing those in, but the best way is to do it like this, step by step, because you can see how I'm drawing the levels and explaining it. Now I'll be looking on my lower time frame for some kind of entry, or I would have had a level drawn in it on a lower time frame. There's lots of different entry methods. Now we have, I believe, let me just clean this up, this is a higher low than this, not by much, but if I was to draw a line, you can see, if I enlarge, I can't enlarge it anymore, this is just slightly up, which means we have a pivot point. So if I've got a pivot point right here, I have to reduce this level here. That's the only thing that's valid. That is the only area that is valid now. Anything below that, I'm not looking to go long. So now I'll be in the trade, and it's either going to stop me out if it comes back, or it's going to work. So we've got, and I want to draw this in as we go along. So we've got this pivot point here. Where's the pivot point above? What do I need to take out at this moment in time? Just think about it, and I'm going to draw it in. That's enough time. This is the nearest pivot, because it's got a higher high than this, and these two have got lower highs than this. So the 3 candle close, pivot point, 3 candle close, 1, 2, 3, pivot point, levels reduced. So I'm going long at the moment. My bias is completely on the long side, and we're still looking at longs. I haven't got a pivot point here. This is a higher low, higher low. Now we've got a lower low. This can still come down and bounce from this area. So if you're in the trade, you stop what was down here. Maybe, let's say as an example, you bought this whole level, would be reduced here. So you've got trade management somewhere, maybe 20 pips below that, because it's a monthly. Yeah. So you've got that a stop here. This is the only pivot low, but what have we got above? This was the recent pivot highs, which is still a pivot high. I'm gonna circle them in, because they may be used in the future. But we've also got another one here, pivot point. So my bias is still long. I'm not looking to short. If I was looking to short up here, let's say we pushed down and took this pivot point out, because this is the pivot point below, then I wouldn't be looking to take a level above. Now we've got this pivot point. If there was a level here, we took that out, I wouldn't be looking to short. It'd be cancelled, if that makes sense. Okay, so when you take a pivot point out, you can't go short above it, and you can't go long below that pivot point. Okay, so let's just see what happens at the moment. Because what that pivot point will do is now get ready for the next month or two setup. What I'm trying to do is find a new potential setup or manage this trade that I'm in now. Now you can see I'm going to clean this up, this pivot points again. I'll leave that one on, but this one, we've got a line here that we need to close above, okay, to create another level. And now we've got another level. So now let's say you're in this position and you're managing it, you might want to add to position. Again, different strategies. You can't really bounce around and make different strategies up. If you've got a trend following, this is probably the way you want to do, build a position. If you're going for one target, you get out and then you look for another setup. So now because we've got this little pivot as well, I should point this one out. Because we had this pivot point here, this level now is no longer. Okay, and now we've got this close above, we have a new level. So if you was in the trade, you'd probably manage your stop below this area, because if it got stopped out, you wouldn't be interested in buying because it's not following the rules. So why have you stop any lower unless you're just going to play for like a casino, just gamble, and that's not a strategy. So we've got a new level. We don't have to take this pivot out because we've got a pivot point here that we've closed above. This to me is probably irrelevant now. Maybe used again if we start to bounce around and take this pivot point out. You can go back in time, but at the moment it's pretty much irrelevant. So now I'm waiting for price to come back into this area. There was the close above. Actually, that was the close above, so I'm going to use this candle as well as the base. You see, we didn't close above this candle to this one, so this is the basing area that I'm looking for longs. Anywhere in this area I'll be looking to find my setup. And let's get back onto the Forex tester and see what happens. Price hasn't retraced yet. I've got no other pivot except below where my level's created. Nothing to worry about. Price is coming down. Everything looks clean, still looking clean. Now we've got a pivot point. Can you find what I'm looking at? Well, we've got two pivot points, but because I'm already going long, I don't have to worry about taking a pivot to the upside. But where's the other pivot point that's going to stop me buying this level now? Right here. Okay, so what I need to do is pretty much delete this level. I can't reduce it, can I? I can't actually from here reduce it down because the pivot's above. So this is deleted. It's gone. We've got the pivot point right here, and we've got a pivot point above right here. So let me just circle them back in again, so you know we've got this is the pivot, two candles either side, close below it, or I should say the highs are lower than the high here, and the lows are higher than this low here. So there we got a pivot. Now I'm waiting for a new setup. Okay, I'm not looking to buy. If I'm already in this trade from down here, I'm managing it below this pivot point now. So if you can imagine, bear with me one moment. If you can imagine, my stop has come from when we entered this level here. It's gone up from here initially. It's moved up under this pivot point, and now would have moved up under this pivot point as a trade management. So let's see what happens now. What gets taken out? Now I would have got stopped out. If I would have bought here and tried to, or bought down here, wherever it was we would have got in, somewhere here, the management would be here if you trade management. The target would have been up near the bodied candles if you wanted to get out that way, which is pretty much in the same area. If the stop was here, it's probably got a few extra pips by managing it than if you would have just took your target from buying down here and getting out at the top end of that highest point in the trend direction. So now we've taken this, let's go, this pivot point right here. Let's draw a level in. We've closed below this pivot, so this area is my supply level now. Now I'm looking to short. The trend is up, that big trend, look, it's continuing up here, but I am looking to short because this is what the recent price action is telling me. I've not taken out this big pivot point, or maybe on a bigger time frames like these areas. So bigger time frames, you may be looking for longs here, but on this time frame, let's say I had a 3 monthly chart, might be looking for longs, but on this time frame I am only looking to short if price comes back up in that level. because remember, this is the pivot point we've closed below. And don't forget, this isn't gospel. This does not work 100% of the time, because if it did, no one would be trading the world, because everyone would be making money following a 100% system, and therefore there would be no trading, because you can't have everybody becoming a billionaire. You just need to find these little patterns that no one else is really looking for. Can you see we've got another pivot point right here? So that's telling me if we push below that, we're in that direction, definitely. I haven't got another pivot point above. This is the only pivot point at the moment. So let's just see what happens. I've not quite reached that level. One more candle close can tell me if this is going to be a pivot. Now, this is now a pivot point right here. If price comes up into this level, can I short? Obviously not. Pivot point's taken out. I can't even reduce it down. It's just got to be deleted. I'm waiting for a new level to take one of these pivot points out. Obviously this marks stay on the chart, so as price moves forward, the marks don't move with it. So let's just continue and see if I can use some more live examples. Now we've got a close below here. We've got a new level. That's the level. Anywhere in that area, I am looking to short. Anywhere. Let's get rid of that. So that would probably maybe an entry on a smaller time frame. Who knows? There is no pivot point still here, so we can still short this whole level still. So I might be looking for a second entry. I may have been stopped out. Let's just expand this level a little bit. Because I've already taken a pivot and I'm shorting, I don't have to take this one out unless I want to short from a new level, if that makes sense. It's just this whole area still. Can you see we have a new pivot above? Right here. Okay, if price takes that out, we can't short. So what do I have to do with this level? Reduce it down. If I'm in a trade now, where's my stop? Here. If it was here, it's now here, reducing my risk, reducing my loss. Now we've got to close above this pivot. So now we have a new level because we closed above this pivot point, and I would probably class that area with this wick and maybe this low. I mean, you could use all this pretty much as a level, but let's just drill it down a little bit here and use this low. Really, this is probably the level because this is already a pivot point here, but because it's so close together, I'd probably be safe and just come a candle back. It's so close. So now I can look for longs in this area. If I've got a pivot, where's my nearest pivot point below? It's here somewhere. It's here. Just bear that in mind. We've got the pivot point here that we need to take out before I can go short. I'm only looking for longs. And I'm going to wrap this up now because I have to actually shoot off to my company now, do my night shift. Now you can see, and I didn't draw that in, but we have a pivot point right here, and we've not got one bit. We've got one below now here. So straight away, this level is no longer, and I have to wait for a new one to be created. So I hope that explains how I'm looking at this in slow time. Okay, there's going to be one more candle. Let's see if we get another pivot point. This was another. Now is another pivot point right here, the nearest pivot point. We've closed above, and so the market continues in its direction again. Coming in for another entry, possibly. May have been very close. If I look at where that high was, it just touched that area. And we've got a pivot point above again. We don't have to take it out, we're already in that direction. Unless we want to buy from this area here, we need to have a close above. We haven't got one. But now we have. So this level now becomes invalid because it is obviously got this pivot point below. I should have drawn that in a bit sooner actually. From here, and I'm going to come back just to show you. As soon as we got this candle close, this would have had to be straight away. There we go. That's the only area I've got to buy from now if price dropped again, because that's the pivot point. But you'd be in the trade and off it goes again. Now there's I would almost say near perfect examples. If I go through the market, there's plenty that I can show you, and I will do in the future. And you also see it in the live markets where you're just sitting there waiting, and then you get stopped out and the price goes the other way, and you have to just sit on your hands and wait for the next setup. But I hope that clearly explains the pivot points and mainly these two rules, to make sure that you absolutely understand, and take a little snapshot of that, because it's very, very simple. So safe trading, guys. Thanks for subscribing. Keep the questions coming, and I'll obviously try and answer and make videos for the questions to build this strategy deeper for you guys. That's it. Safe trading. Don't forget to subscribe. Catch you later.